Let's get across the market open now. Jonathan Takadina joining us from MPC Markets. Jonathan, happy Monday to you. Yeah. Let's begin with results because, of course, we're in the midst of earnings season. A couple of updates today. Westpac among them.
So just in general, like obviously when this is the bulk of the, this is going to be the busiest week of earnings season. So we had a fairly busy week last week, and then obviously Westpac's come out this morning. Looks like they missed their profit target by a little bit, and it looked like a one-off impairment. So just in general, I mean, I think we're gonna have a negative start today because obviously the SPI futures are pointing down. But just in general, the banks have been bought up and continue at record highs. So I think this will be that little dip, that little pause that the markets needed in the banks, and it'll take a little bit of a breather today. And obviously, if Westpac came out with this maybe last week before this first dip, it would have been bought into. But I think it'll be it'll be down today, but I don't think it'll be a heavy sell-off. And just in general, as I've explained a few times, chatting about the banks, they're the biggest beneficiaries of that sort of passive flow into the markets. They're all at record highs, and just as long as that momentum continues, that money flow continues, it should be bought up.
Do you see much disparity, particularly between the big four? Obviously, we had CBA's result last week as well.
Mm-hmm. Obviously, CBA is still the market darling, and I keep saying that Mark often says that fund management is a popularity contest, and I tend to think that stocks are a popularity contest as well. And we've seen this, the stocks that are the most in favour, the market darlings, they continue to get that passive bid, the support from the fund managers, and that continues there. So obviously CBA's always been the market darling, the leader sort of in that space, and it continues to do so. But just in general, look, all the others are doing well as well. I think NAB's probably the second most popular out of the big four, and then ANZ's in last, and sort of Westpac's around the third spot.
Now, elsewhere, Ordinate, I should say, also out today. Of course, that has been under extreme pressure.
Extreme pressure, and now you see why. They've missed by, I think, they have a net profit. They've not declaring a dividend. They've missed the revenue numbers as well. So yeah, big misses all around. The share price has been hit, previously on the last few results. So we should see some more selling pressure today.
Yeah, it's an ugly chart, isn't it?
Yeah,
when we look at Ordinate. A2 Milk, have you got across that at all?
No, unfortunately, that one I missed. But I did see that. I think they beat the top line there.
Yeah.
But I haven't been across that space. Obviously, their main market is China, and the actual China stock market's back near 2024 highs now. So, that could be bode well for them.
Now, of course, looking at a macro level, this week it's all about the RBA.
Yes.
That rate cut is priced in.
Mm-hmm.
What are the potential risks there? I mean, particularly, I guess, if they don't cut tomorrow.
Yeah. So just in general, what happens is that the market's always sort of pricing future events. It's always forward-looking. And what happened was, I think it was either the retail, it was an inflation print maybe in December last year that sort of was just a little bit softer, and the market said, okay, the RBA is going to cut in the next meeting. So the markets all through that period, that's why all the banks rallied, the indices all ran to new highs, and that's what the market's priced in now. What will happen though is that if they don't cut, that gets priced out of the market. But what we'll see now is that if they do cut, which is what they expected, it's kind of a wait and see on how the market reacts to that. But if you're looking to buy in, after the cut happens, I think you might have missed the move already.
Well, on the assumption they will cut tomorrow, what stock-wise, any particular beneficiaries, or has all that already been priced in, do you think? I
think it's already been priced in, but just in general, the stocks that have the most momentum. So I was a little bit more bearish about the markets around that December period when the bond yields were rising higher. But I just think in general, that passive flow continues. So the stocks with the largest momentum will continue to trend on higher.
When we look more globally, of course, expectations Donald Trump's going to unveil more tariffs. So clearly that is concerned. We had some weaker than expected data out of the US at the same time. Yet you take a look at what happened on the Wall Street was mixed, but the Nasdaq actually had a record high.
Yeah, exactly. So we had that whole deep sea movement where Nvidia lost it was a massive move. It was down 17% at one stage. That's back in the middle of the range. So, and there's a lot of Nasdaq stocks, and we've talked about it within the AI space. There's a lot of sort of what we call the second tier. So now, that first movement has been done in AI. Now it's actually down to making money. Which of the companies are going to take AI to the next level and actually increase production within the spaces? And they're the moves they're the stocks that have been moving. So things like Palantir, I think Autodesk, they're all at record highs. I think Costco is at record highs as well. So just in general, the US markets are heading higher. But yeah, the retail sales did miss by quite a bit. I think a lot of analysts are pointing to, I think, colder winters on the East Coast, and then we had the LA fires. So they're considering that a one-off, but the bond yields are kind of looking at that going, hang on, that's not as a rosy picture as we've seen. So that's why it's been mixed markets. Obviously, Nasdaq went to record highs, but the bond yields are showing that there could be some caution pricing in here.
Meanwhile, that volatility is continuing, particularly among commodity prices at the moment. Copper, it's up, it's down. In fact, on Friday, I think most commodities were down, including oil, and gold took a tumble as well. Was that profit taking?
So the way I see it, it's kind of like there was some weird timing. Like silver, I was looking at the 32.50 level on silver. It broke through that and it held that for a good few hours, but then right into the close, it got smacked and then went closed back under 32.50. So same thing happened in gold and a lot of the other metals. So I think that's more positioning. If you read the Twitter feeds, there's a lot of talk about the London Metal Exchange not delaying deliveries by 4 to 8 weeks. So all the gold bugs are talking about that and price manipulation. But with the US dollar weakening, we should see commodities rallying. But so it's just interesting sort of price move of that. I can't make a call here and there, but just in general, my long-term view, as you know, I'm quite bullish gold. We've had a move to record highs, so I just see this as maybe not buy the dip straight away. We could have a 1 or 2 day correction, but just in general, I'm still quite bullish the commodities.